Yes, hello there. Welcome back to grade 12 accounting. Today we want to look at the question paper of February, March 2014. We're just going to look at an aspect on that question paper that is on interest capitalized. We are going to go through the calculation of interest capitalized. So interest capitalized on its own, it means the cost of borrowing to acquire or construct a long-term asset. So basically to capitalize, we are adding. So when we are saying we are capitalizing, it means the interest is being paid back to increase. So this is what we have to increase the interest balance. So that is what we have in terms of the explanation that is on interest capitalized. So the interest capitalized figure is the figure that we are going to put in the income statement. Remember, when we find the figure for net profit before interest expense, we are going to calculate the figure for interest. That is the same figure for interest capitalized that we are going to put there. So if you go to our question, you would see that this is where we have the explanation of interest capitalized. The explanation reads, interest on a loan was capitalized, but has not yet been entered. The loan statement from Help Bank on 31 December 2013 reflects the following. So we have got a loan statement that we are given there of Help Bank. And then we've got balance on 1 January 2013, and then we've got interest charged, this which is a question mark, which means we have to find this interest charged. Then repayments to Help Bank during the year, and then we've got the balance at the end, which is on 31 December 2018. So remember, to find the figure for interest capitalized, we can use a formula that we say interest, that we say opening balance, balance at the beginning of the year of the loan, and then we add the interest capitalized figure, then we subtract repayments. When you do that, you get the closing balance. So basically, this is our opening balance that we have there on 1 January 2018, and then our closing balance is 310,000. Then for repayments, we've got 50,400. So we are just going to substitute those figures in the formula that we are having there. Then we can always make interest capitalized subject with the formula there, and then we can calculate. So in terms of making interest capitalized the subject of the formula there, remember, we are going to transfer these balances to the other side, and then they're going to change their sides. So we are going to say interest capitalized is equals to closing balance. When we put this opening balance to the opposite side, and we're going to change from a positive side to a negative side. So you'll say minus opening balance. And then for repayments, it's a negative negative sign there. We change it to the other side, it becomes a positive. So we say plus repayments. So now what we are going to do, we are going to substitute the figures that we have there. So now we can now substitute our figures there. Our closing balance, we have got 310,000. So we are going to say 310,000. And then we subtract our opening balance, which is 320,000, 320,800. And then we add our repayment figure, that is 50,400. So basically like this. Then we can try to calculate there correctly. So if you calculate correctly there, you'd see that you're going to get a figure of 39,600. So this is the figure that we are supposed to put in the income statement, in the statement of comprehensive income after profit before interest expense. Then you put your interest expense, which is 39,600. So this is what we have in terms of the question paper of February, March 2014. Those who haven't subscribed, please subscribe and share. We are still coming with more tips and videos so that we can pass our upcoming June exams. With that, I'm signing out.